Hello, what's up, guys? Welcome back to Zodiac Trader. So I just came back from Japan. Spent a week right there. Uh, I was in Tokyo and Osaka. I will make several videos introducing the Japanese economy and express a little bit of my take on what's happening there in Japan and why I'm relatively positive on Japanese economic outlook. So please subscribe to my channel so you'll be able to get the latest update of my take. So also forgive me if my voice is a little bit uh, kind of bad because I'm like having cold. Okay, so let's go, skip the crap and head right into the topic. So today we're going to talk about inflation. So as we were saying, as we have previously discussed, that I don't believe that inflation which is coming back to 2%, and I believe that the U.S. core inflation is going to bottom and then hike again. And yesterday night there was the U.S. Core inflation data came out. We were actually seeing the core inflation actually bounce up a little bit, climbed by 0.4%. And right now, the U.S. is having around around 3.2% of inflation. So, which is contradict to the what mainstream media have been believed about the U.S. economy. I would like to say that there are three things that I would like to emphasize. First of all, we still have in a recession risk. We still have the possibility for the U.S. economy to have a hard landing. I kept saying that for a year now, and I believe a lot of people have been saying like no, U.S. is not going to have a recession or whatsoever. But like usually that recession would take time. You would my actually take on the U.S. economy would be like there would be first uh, you will have high inflation, hence why you're going to have a really bad bond market, and after that you're going to have a very strong dollar, and on top of that you're going to see economy size shrinking, and then that problem, and then you're going to have a kind of U.S. Recession kind of crisis. So that's my opinion. It could be wrong, but I'm still expecting. And second, that I believe that right now we still have this inflation risk because we are going to have another Fed meeting next week, and we were going to see if the Fed is going to lower than lower the interest rate. And a lot of investment banks been saying this very aggressively that they've been thinking about having this Fed cut for maybe even five times a Fed cut. I would say that's over optimism because right now the market still having this extremely kind of risk on kind of sentiment. That's what's been driven the stock prices to getting higher, not because of the economy, but people believing, institutions believing the rate cut. That's why these money been flowing to risk on assets. That's hence why the stock market is hitting a new high, and that is quite obvious and self-explanatory. So, which is the reason why the the Fed chairman Powell said something a bit hawkish that he believed that it is not the perfect time to have a rate cut. Reason because if uh, if he has done this rate cut, if he is going to have another rate cut, I think the market will further go up. The stock market will go strong, and then that's why the inflation could climb up even higher. And that inflation is going to be really harmful for the economy system. So you have two market force. You have people who are expecting rate cut, which is a bit of an easing force, and you have a Fed having this hawkish, kind of expectation. So that would be a little bit like another force And right now we're hitting an equilibrium. So you have two forces. One expected that to go up. One expected the market to go easing. One expected the market to go more stringent. Um, you are seeing these equilibrium, so that's why, and then you're seeing a little bit increase of that CPI print. So I wouldn't say that would be a good signal because even though the Fed trying to be hawkish, but still the market is has significantly overreacted. Hence why the U.S. inflation stay elevated. Okay, and lastly, I'd like to mention that right now we're going to see a lot of geopolitical conflicts unfolding. We're going to see Red Sea crisis. We're going to see Taiwan crisis. We're going to see the Ukrainian Russia crisis, and the market been really optimism for long and seem to negligate what's going to happen next, which is pretty bad because they've been ignoring the main risk of the current market. So I would say right now, traders, investors should actually pay more attention to what if kind of scenario. What if the Fed decided not to have a rate cut in this environment? What if the inflation actually peaking another time again? So right now, because the inflation hits to 3.2%, I believe this is the second time. So I would say right now the inflation has bottomed. So we're going to see that inflation coming right back, and so that's why a lot of people been viewing wrongly about economy because they believe that inflation will quickly go back to 2%, and the Fed is going to have easing and have rate cuts. So from my understanding, I believe that there will be a certain scenario that's good for a rate cut. For example, when U.S. is hitting a debt ceiling and there will be short-term chaos and short-term uh, kind of recession, and by that, the Fed is obliged to have a rate cut to actually bring more and excessive liquidity and leverage to the market. But right now, I don't believe this is the right time to have a Fed cut. And talked about the debt ceiling thing. I believe I believe the debt ceiling thing could be one of the key issues that we have to look at, especially after November. The Biden and Trump administration are going to have a presidential election. So I'll make videos discussing their policies and what would impact the financial market afterward. So thank you guys for watching this video. I apologize if my voice has got a little bit too bad. And I will see you in next episode. Please subscribe, click that like button for me, and I will see you in next episode. Goodbye.